Today, I'm diving into a potentially game-changing idea in the housing world, the so-called portable mortgage. What it is, how could it work, and what it could mean for you. What is a portable mortgage? By definition, a portable mortgage would allow you as a homeowner to take your current mortgage loan, including the interest rate and balance, with you when you move to a new home, instead of paying it off and taking out a brand new mortgage at today's typically higher interest rate. Number two, why is this idea being floated now? Here's the backdrop. Many U.S. homeowners locked in low interest rates in recent years, say 3 or 4%, and now have very little incentive to move because if they sell, they'd likely have to take out a new mortgage at 6+% depending on the market. That lock-in effect reduces movement in the housing market and limits inventory. So by enabling a portable mortgage, the theory is you could move without sacrificing your low rate, which may make you more willing to sell, thereby increasing home listings and mobility. Number three, who would benefit and who wouldn't? Homeowners who already have very low rates and want to move, upgrade, downsize, relocate, but are stuck because of the rate differential. Here are those who wouldn't benefit. Renters and first-time buyers. They don't have a low-rate mortgage to carry forward, so this doesn't reduce their rate or down payment burden. Also, homeowners whose new home is significantly higher cost might face extra money to cover the difference. As noted, if the new purchase price exceeds the remaining balance of the old mortgage, then the gap must be made up. Number four, the big challenges and trade-offs. There are several major hurdles and potential unintended consequences. Mortgage-backed securities and financing structure. The U.S. mortgage system relies heavily on long-term fixed-rate loans sold to investors, and the model assumes a payoff when a home is sold. If you carry a loan from house to house instead of paying it off, the investor model changes. Risk of higher overall interest rates. Well, because of the added risk to many investors, they may demand higher rates or wider spreads, meaning today's new borrowers could end up paying more. It may exacerbate affordability divides. If homeowners with low rates can port them, they gain more buying power. They might outbid others or push up prices. Meanwhile, those without such low-rate mortgages don't benefit, potentially widening the gap. Legal, contractual, and operational complexity. Mortgages are tied to specific properties, legal descriptions, title, escrow, tax liens. Transferring that to a new property raises logistical, legal, and regulatory issues. Number five, what to watch and what it might mean for you. If this becomes available, and if you already have a very low rate and are considering moving, this could help you keep that rate rather than starting fresh at higher market rates. But if you still need to meet the lender's affordability criteria for the new property, cover any cost difference if you buy a more expensive home, and ensure the terms of your mortgage allow portability if implemented. If you're a buyer or renter without a low rate existing mortgage, this won't directly help your rate or down payment burden. So many structural affordability issues remain. Policy and implementation matter. Until regulations, lender practices, and investor model adapt, portable mortgages remain a concept under review. In other words, potential, not in practice yet. So there you have it. The proposed portable mortgage could unlock some movement in the housing market and give homeowners a way to move without sacrificing their low interest rate. But it's not a silver bullet. It raises complex trade-offs, and for many people, especially first-time buyers and renters, the benefit may be limited. If you're thinking about moving and you currently hold a low-rate mortgage, keep an eye on this proposal and talk with your lender about whether and how such an option could apply to you. I'll keep you posted as this develops. Thanks for watching.